Good morning and welcome back to Almus Market Mornings. For a change, let's talk about monetary policy. We have got two important monetary policy decisions today. First, the Bank of Japan. They are expected to raise rates by 25 basis points, bringing the rates to 1%. This time, the deputy governor will be in the spotlight as the governor is hospitalized. Next, we have got the Reserve Bank of Australia. Now, they were the first major central bank to begin the hiking cycle, hiking three times in their three meetings in 2026. But this time around, it's expected that they will remain put. And when it comes to the Strait of Hormuz, again, it feels like the Schrodinger Strait. And to the US, it's a free highway. Nobody owns it. To Iran, it seems to be something where it wants to get compensated for services. It seems it is open, closed, free, and charged all at once. And that would be cleared only by Friday. And possibly even after Friday. Good morning, JK. Some important rate decisions today. What do you think? Can they be market movers, especially the Bank of Japan rate decision?
Yeah, good morning, Swaraj. Yes, we start 2 days of hectic monetary policy actions. And yes, as you said, BOJ will hike rate by 0.25%. It's coming after a long period of expectations. And Australia is probably going to pass this time. They have already hiked rates much earlier than others. And now that the Iran-US war is also seeing some sort of a pause, or maybe at the best, sort of peace that will prevail for a longer period of time. And oil prices are down yesterday further, closer to 80 now. So those factors will probably make Australia Central Bank, uh, you know, hold the rate. For BOJ, why they would hike even in this situation is because they have been behind the curve for a long time. Their real rates are deeply in the negative. Just to elaborate it, inflation is around 1.75%, but their policy rate is at 0.75%. So there is a need, and this is also making the yen weaker. And as investors see deeply negative rates, they don't want to buy that currency and invest in that currency. So that's what is driving the BOJ rate decision. That said, I will also look at how they, uh, present their post-meeting statements, whether they continue to indicate more rate hikes, normalization, etc., is what I would like to look at. And of course, monetary policy beyond today also, we have two more rate decisions. That is one tomorrow on by the Fed, and the day after tomorrow by Bank of England also. Bank of England, of course, is likely to sit tight on the current rates because they have more concern on the economy, how it is behaving. As far as US is concerned, there's a lot of interest going into the Fed meeting this time. It always is. And this time, the special factor is this, the new chairman, his new approach, what people are expecting him to present. He is a person who doesn't want to communicate too much into the market and tie, and then raise the expectations by the market. And then if they don't act according to those expectations, there is market volatility, etc. He also doesn't want to consider temporary factors which influence the inflation. So the less communication, more accent on sustainable trend in the inflation. This is what is, his new approach would be, and how we maintain the independence of the Fed amid all this is something that the market would be looking ahead to. I, for one, would like to see his first press conference tomorrow, definitely, though it is late into the night. And the other central bank, though their rate decision was already seen last week, that's the European Central Bank, who hiked rate by 0.25%, they still remain hawkish. Their members of ECB are not comfortable with the outlook for core inflation about 2%, even though they have tightened the rate last month. So there is a possibility that ECB will hike further, maybe not in July, but going forward, because unless they see the inflation coming closer to their target, they would not be, pausing. So that's the way monetary policy is looking at, and this, of course, is also important for the way dollar behaves going forward, and the risk assets also. And we already have the yields, though they have retreated from the highs, they could still be, somewhat higher than what they were a couple of months before. because inflation is not just driven by oil, it's also somewhat broad-based also in many countries. So that's something that we will have to watch. Yes, on the war front, I think the initial euphoria of the MoU between US and Iran that is slowly tapering off, and there is a lot of vagueness in the underlying terms, which is not disclosed. Broadly, they have said about de-escalation, Hormuz strait being gradually opened, and what is the terms of this strait being opened? It will be controlled by Iran, whether or it will be freely allowed, and what kind of compensation US has agreed to pay. Iran says they would get a good compensation, but US is not really committed to that extent. Another important thing is Trump is not attending the signing ceremony on 19th at Geneva. It's being attended by Vice President Vance. So the combination of undisclosed terms, conflicting official statements by Iran and US, Trump's absence from the ceremony all suggest that the agreement may be less final, potentially less comprehensive than the initial headlines imply. So there is scope for some disappointment. And also, if you look at oil, oil has already come near 80. And now that market has fully discounted, more than discounted the fact that war is over. We are down to now how the oil supply versus demand plays out. There are two views. There is accumulated oil inventory, no doubt, but for the ships, the hundreds of ships carrying oil to pass through the strait will take some time, and therefore the supply chain issue will sustain for some more time and will ease over a month or two, provided there is no re-escalation. So all indicates that the rally that we have seen in the last 2 days in everything may pass now, and market may be more focused on the monetary policy. Also, another point to note is that the U.S. Strategic Petroleum Reserve has fallen to the lowest level since 1983. So even if the oil resume supplies, there will be urgent need by countries, to replenish their reserve oil also. So now I think we are down to somewhat more objective assessment of how the oil price moves from these levels, and not just driven by headlines, and how inflation will pan out with these factors. Now, there's quite a bit of news on the India side. India trade data yesterday published showed that there was a marginal decrease in the deficit, 28.21 billion versus 28.38. The important factor is that India's exports rose 18% year on year, and this is one of the largest rise month on. This is the largest month-on-month rise in absolute terms at 45.2 billion that we have seen, and this is on the merchandise side. And import also rose 21%, but that was well expected. And there is good news that India's exports to the Middle East have been restored to the earlier levels, and even the import of gold also, of course, has resumed. But the overall number is, of course, somewhat better. Although, including the services, the overall net deficit is somewhat higher at 10 billion versus 7 billion on a month basis. But I think from here on, what we see is the impact of the import curbs coming into play, as well as the how the weakness in the INR plays out as far as the exports resuming after the shipments being opened. We also had the WPI, which accelerated to 3-year high of 9.68%. And that's not surprising because it's mostly driven by the energy prices, although even the food inflation also rose during the month. So that's something that the market, the RBA will keep an eye on, although CPI is what they get guided by. And because of the monsoon concerns, food inflation is something that they would keep an eye on. Another important factor for India is the finance minister's statement, which said that we think there will be further steps towards getting more capital. And although we have at the moment confined only to bond market, the withholding tax, there are more measures on the way. So there can be measures to curb capital flow outflows as well. There's some people who believe that the outflows permitted per individual at 2,50,000 at the moment per annum may be halved to 1,25,000. Although how much impact that will have on the forex outflows is something that we need to see. I think headlines from Indian authorities for curbing the exchange rate weakness is still not over. They would be vigilant. If we do see fresh weakness, I think more measures will be coming. And speaking of the exchange rate itself, I think yesterday we saw rupee drop to 94.50, slightly below that. And this was a direct result of US-Iran. We reported MoU on peace, but there is some demand expected at 94.50 levels. And now that we have the Fed meeting ahead, and the dollar itself could see some, recovery that could lead the dollar rupee also somewhat higher, because we have come a long way. Almost like 97 to 94 half is around nearly about 2.5 to 3%. So we could see some value buying, or I can say the buy on dips, which the importers will do. But the overall direction, I don't think it is changing. We still have some room on the downside. 95, 30, 20 areas, we could see renewed interest by exporters to sell. But all in all, we still wait for the final picture on the US-Iran deal. We always have to see the final written down signed deal, rather than all these headlines, which are claiming that both the side claim by both sides that they have got the best terms. So that is what we have to see in writing, and then of course the Fed monetary policy. Thank you.
Thank you, JK. And yes, on the war front, we need to see something in the writing. The initial euphoria with respect to the MOU is dying down. There are a lot of things that aren't clear, including the control of the strait and whether US will be paying any sort of compensation. And these things are not very clear. But yes, we did see some positive reactions, including in the rupee, which strengthened to 94.40 before marginally sort of weakening again. But that's something positive. And of course, we saw yesterday evening the trade numbers come in. The trade deficit was flat roughly at 28.21 billion for the month of May. And domestically, those are two themes that there are to follow. On the monetary policy front, the Australian Central Bank is likely to stay put, and the Bank of Japan is likely to raise rates today. BOJ has been known to be behind the curve, and yen is having a tendency to weaken, and that's driving them to hike rates by 25 basis points. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.